Overall, if you see whether it's an attractive play or not, if we can just have the first slide clearly, which just talking about the top line as well as the profit number. Now, overall, if you see the FY25 top line, in terms of 2-year CAGR, NSE is at 13.9% versus BSE at 90.4%. So clearly, in terms of the CAGR, NSE is way lower. Similar is the trend in terms of the profitability as well. That's the compounded growth. If you see 28.7%, that's the 2-year for NSE versus 145%, which is in terms of where BSE is concerned. Now, let's understand the market share trends between the two of them. What is interesting is, let's only mainly concentrate on the equity options, wherein NSE equity options has been losing market share, and in this category from 100% it's come down to 87.40. Now, why this is happening is because BSE has gone ahead and ramped up their options trading, and that is one of the reasons why you're seeing this kind of a downtick in terms of where market share goes. Let's understand the operational efficiency also of both the companies. Now, yes, the operational efficiency has been fast, but what is interesting is, for BSE, it's faster as compared to NSE, and it's mainly the higher derivative volumes which are aiding the operational efficiencies of both the exchanges. If you talk about NSE EBITDA margin at 66% versus a 50%, which is 2 years ago, and BSE EBITDA margins are at 54% versus 24% 2 years ago. So that tells you in terms of where the operational efficiencies lie. Now, with all of these parameters, yes, it does seem that BSE from a business perspective seeming more attractive than NSE, but what are valuations telling you? If you have to look at the valuations which is current, NSE is cheaper as compared to BSE. NSE is trading at 43.7 times versus a BSE which is trading at 74 times. So it's an absolute play in terms of growth and value. Which side you want to go in terms of the boat is what is a call that the investors have to take, but that's what it is looking like so far.
Thank you so much, Hiral, as well as Alex, for breaking that down pretty comprehensively for us, frankly, and a very interesting one as well. It's listed versus unlisted. It's free market versus slightly more restricted in that sense, if I can call it. But it's a very interesting play. It's not something that we've seen too often, a BSE versus an NSE and the kind of opportunity capture that's there. Dharmesh, do you have a view with regard to, I would well presume that you may not talk about an NSE because it's unlisted, but if you do have a view, and if not, then just give us the context. BSE gaining market share, trading at 74 times, large expansion in terms of margins. Do you see some of these tailwinds continue for the BSE and the valuations justifiable?
I doubt that these tailwinds will continue for BSE for a longer period of time, maybe for a short period, 1 year, 2 year, it may. Eventually, the valuations have to merge in line with, international peers. So if you look at the EPS of NSE for FY25, it was 50 rupees. And at 2000, it's trading at around, say, 40 times P multiple on trading basis, whereas BSE is at around 75 times. BSE is still on, 1/10 of the profitability which NSE generates. So eventually even that will catch up. And globally, all of exchanges trade at around 25, 30 times P multiple. And even their market has grown. It's not that they are not growing and still they are commanding this kind of a multiple. So, US market has grown more than what our market has grown during last 3 years. So my sense is wait for this NSE IPO. If you are holding BSE share, try to book partial profit right now. And post that, to my mind, NSE is still a better option to go in for long-term investing.